Welcome to Crypto BS. I'm Al.
And I'm Craig.
Welcome back, Craig.
I am glad to be back.
You were a little under the weather last week. I'm glad that you're back up and kicking and you've survived.
Well, I survived, but I'm still a little sick over here, so you'll probably hear me hacking and coughing throughout the whole podcast.
Well, let's try to keep it on the sidelines just a little bit, like half of your money.
True. You're just lucky that you're like 8 feet away from me right now.
I'm glad to be. So welcome to Crypto BS. We talk a little bit about the market. Big market news is that I was wrong, and Craig has been rubbing it in my face all day since the ETH merge did occur. What can I say?
Ha-ha.
I took the over, seeing how they've never done it before. So how could I possibly think that it was actually going to occur? But we're not out of the woods yet with ETH.
Ye of little faith.
I still have little faith that this thing is done and over with. We've got several years more for them to hit the marks that they're trying to hit as they move forward.
Is it not surprising to you that the market has gone down since the announcement?
No, and if you will recall in our cast, I think 2 or 3 weeks ago, usually we have the run up right up to the big announcement. It happens, and then
It's
sell off.
Buy the rumor, sell the news.
Yep, and if you guys have been looking today, they've been selling it down. We had a little bit of a run up right after the merge happened. ETH went up, I don't know, $50, $100. I don't remember, but it had a little push up, and then since then, over the last 4 or 5 hours, we've had a pretty substantial pull down. It's been down to 1457 is the lowest that I'm seeing it. It's currently at 1511. I did start enacting rule number 3 today, and I have started to scale in, which is rule number 3 for us. Happens to be what we're going over today.
Well, before we get into rule number 3, scale in, scale out, I have a couple questions for you.
Fire away, Craig.
Well, I'm sure you've heard the argument for Ethereum that the price was already baked into the cake. It was already priced in. The merge was priced in. That's what the whole run-up over the last couple weeks has been, of Ethereum pushing to those higher prices. How does that fit in with the trend we're seeing now of it pulling back? If the merge was priced in, why is it going down?
Well, I think that there's a couple of reasons for that. I think that one of them is that people didn't quite understand how the fee structure was going to be affected. One of the things that's promoted is that once the new Ethereum is in, that the fees were going to be discounted. All the fees were going to start coming down. And that didn't happen. And I think that that's because we haven't got to the sharding point yet where that is going to be, where I think that the fees are going to be affected. And this wasn't it. This was the first leg, and we talked about that before. This was the first of 5 or 6 legs. The ETH merge, surge, spurge, splurge, urge, all the urges, and that was part of it. So I think that was it. And again, I think it was the buy the rumor and sell the news deal. I think that's part of it. And I think that the final aspect is that's just the trend. I mean, you're saying that the price is baked in. And that's where we've been looking at. We've been seeing ETH over the last month and a half, 2 months. It's been running pretty consistently between the high 1400s and the high 1700s, mid 1700s. I've seen it hit 1780, 1750, but that's the range where it's been running. I'm not surprised at this point that we had a pullback to the lower ranges, and that's why I have also started to kind of ease into it. One of the things I talked about last week was that I had a DCA that I bought $100 worth of Ethereum, of which I have sold. I sold it on the 26th. Hit it. This is for the challenge. I hit it for 112, right at $111, $112, right there on the end of it there. And I have since bought back in. I bought back in this morning, so I've taken that extra $12 of profit with my original 100. And I've gone back in and I bought 0.074, 0.076 ETH for the challenge, and I'm just going to let it ride now. I'm good with that. I thought that was a good spot to get back in. And of course, I've got back in with some of my assets on the private account side as well.
I have breaking news for you,
Oh, well, break.
and it's a complete tangent off what we're talking about today. But I was so excited when I saw this last week, and then I wasn't at work. You weren't at work. You weren't at work. And yet, I forgot about it. And then you talked about the Ethereum fees, and it reminded me of the ridiculous fees from ENS, Ethereum Naming Service. And if you remember back when I wanted to get an ETH address, it was $5 per year, and you could buy multiple years at one time. But the gas fee was like $100. It was, I mean, it made a $5 item $105 to buy, and that's just ridiculous. Kronos came out with Kronos ID. To have a Kronos wallet address, it's going to be whatever you pick .crow. And I looked at it because I wondered what the fees were, what the structure was to get the ID. They do the same thing, you buy per year. Now they give you discounts based on how many years you buy instead of just being a flat 5. It started at just under $10. And then 2 years was about $15. And then 3, I think, kept that same rough discount. So it was $20 for 3 years, and I didn't look past that. Would you like to guess what the gas fee was for the Kronos ID address?
What network is Kronos on?
It is its
So
own network. It is the Crypto.com Kronos network.
No, I don't want to guess.
I'll give you an over-under, okay? So let's start with the over-under of the Ethereum $100 gas fee.
Under.
Okay, you're correct. Half the gas fee, $50. Okay? Half of that at $25.
If I had to go, I'd go $6.
$6. What if I put you over under 3?
Well, if it's under that, then it's got to be considerably lower. We're talking 50 cents.
It was 2 crow. And I'm rounding up.
Yep, 16 cents.
Yeah,
I don't know what
it's
crow
about 10, 11 cents per crow right now.
Wow.
It is 20, 22-ish cents in gas fees. That's how much cheaper the Kronos chain is. Now, let's be fair. The Kronos chain is not used near as much as Ethereum. Not even close.
Well, are you interested in doing that then and having your own?
That's the breaking news.
You're going to do it? Did you do it?
I did it while we were filming.
No!
I did it right now. I just did it. My Kronos ID is Craig2.crow.
I'm stunned.
It's pretty cool, ain't it?
I don't know. Can they ship you crow directly to that
It cost
address?
me $14 for 2 years after the gas fee. $14-15.
Wow.
2 years, I'm locked in.
All right. So, listeners, if you're into crow, send Craig a crow. I want to see this thing at work.
I want to see it at work.
Yeah.
I just got so excited I bought it.
See, how can we have this when I'm supposed to be the one that does things that are a little bit more risky and a little bit more out there, and then you go off and buy Craig at crow.com or whatever it was.
Listen, I will jump in head first on things that are inexpensive. It was $15. That's a lunch. I bought lunch today. Now, if it was a $500 thing, if you locked me in for life, you're like Kronos ID for life, $500. I'm not jumping in head first. It's just not going to happen.
What would your level be? Like $200?
For life?
Yeah.
Oh, it'd have to be cheap. It'd have to be like
Which,
40,
you
50
just did-
bucks.
Well, you just did $20 for 3 years, right?
2 years.
2 years?
It was there it goes. Yeah, it was $14-50 for 2 years. But see, that's because I'm not committed to it. It's not a large. I mean, $50-60 is a medium purchase to me. It's a large purchase. You get 3 figures plus for something like an address at least. You know, if it was a car, I'm jumping over $100 car if it's nice. That's nothing.
Well, are you
But-
now that you know this, are you considering buying addresses for other asset out there like
No.
Walmart.crow?
I'll tell you why. Because Ethereum was the first. Kronos was not far behind. I mean, not far as in years, but not that far behind. Was to keep Matic from doing it. Matic isn't their own chain. BNB. Was to keep Binance from doing it. or Polkadot, or there's going to be all these new addresses, and the one that the people are going to want to use the most is most likely Ethereum. And I don't want to go pay a $100 gas fee to buy several different address names just to sit on them. So if I buy them on Crow, sure, I can have them, but ain't nobody care because it's Kronos chain. It's not the chain.
Well,
But hey, I got my own address now. It's pretty neat. I need to figure out how to use it.
all right. Well, we'll maybe talk about that next week on the next podcast.
But we're supposed to be talking about scaling in and scaling out.
Right, you didn't. Well, I guess you kind of.
I scaled in with one address.
Okay. All right. Well, I guess the other thing is that we should talk a little bit about the challenge because I'd already briefed that a little bit, but Craig and I have a weekly challenge where we add $100 a week to a trading account of which we can do as we please. We can trade it, sell it, buy it, margin trade, long, short, bots, the whole bit. You name it, we can do it. But that money is allocated each week, and it's real money. It's not paper trading. So right now, Craig, you got a little bit of money on the sideline. Your plan is currently to kind of watch and wait. You've got money in bots. How are the bots looking?
Well, I mean, the bots are going to reflect market price. So with the market going down recently, it's under a little bit, but luckily my grids are offsetting some of those losses. So it's not too beat up. We just got to scale in a little bit more with this money.
Okay. Well, are you thinking about going into the bots more or adding new bots, or are you just kind of waiting to see what's going to happen after the ETH merge here?
You know, I'm looking for the right signals. I'm looking at RSI mainly, a little bit of moving averages and Bollinger Bands, and I'm not looking to put more into the bot. In fact, I think I'm looking to either remove the bot, depending on how much I have in Bitcoin versus USDT in there, or just let the bot sit and then just buy straight into Bitcoin, Ethereum asset of choice.
Well, as armchair quarterback in this, I'd say just let the bot go, man. I mean, at this point, like, you haven't lost anything until you get out of it. And why not let the bot keep trading?
Well, the only difference is going to be let's say that it's 60-40 Bitcoin USDT in the bot. If I leave it and the market goes up X percentage, 20% next week, you know, it's only going to be able to sell off the 60% of that money that's in Bitcoin. The USDT just stays there and it just transfers it over in. And it's only going to sell step by step out of Bitcoin. It's not going to sell at, you know, the top or near the top. It's going to be scaling its way out, which is typically fine. But if I'm seeing signals that, hey, we're kind of retesting these bottoms, you know, Bitcoin in this 18 range again that we saw it hit last week.
Last week, yeah.
Yeah, and we've seen those 18s a lot. We've seen a 17 once. We've seen the 18s a lot. And if we get back into the 18s, and I'm looking at, you know, 4 different RSIs that are all 30 and lower, I don't want to have 60% of my Bitcoin or 60% of my money in the Bitcoin. I want 100% of my money in the Bitcoin. So when it comes up, I get to see all of that have gains. So if the bot at this point in time is at 60, 70%, might as well take it out. If the bot's 100% in, if it's bought in going down those grids, then yeah, let it be. So I just don't. I want to maximize my upside as much as I can, and the bot is more of the sideways market play. But if we're getting back down though there to the support, I don't want to play sideways betting. I want to play upside.
Well, you know, you've said quite a bit that Bitcoin really doesn't like to be under that 20,000. Well, now it looks like it's hanging under the 20,000, but it doesn't want to go back down below the 18,000. So maybe it's working back into that channel that it was in 2 or 3 months ago, now that it has broke below that 20 and is...
Yeah, I've always said the band was between 19 and 21, and 20,000 was kind of the mental barrier that I said it doesn't like to be below. But it does seem that it's going down, and it's not wanting to get back over it. I think it's kind of the old adage of the old support becomes the new resistance. And I think we've beat up that support enough times. Now we're under it, and CPI numbers come out and they're not looking so hot. And I think that 20,000 is going to be our new barrier. Now, one good day of good news, which I thought the merge was going to be, but it wasn't. But one good day of news can push it right past it, and then we're back to support level. But right now, I'm looking at trying to get back to short-term bottoms of the 18.4. 18.4 is kind of the range I'm looking at for, okay, let's start pushing more money in.
Well, so here's what's coming up next week. Cardona. So they've got their new upgrade that's coming out. Are we going to see something similar to what we just saw with ETH over the weekend? Everything starts moving up as the Cardona push, or do you think that, well, Cardona's not big enough, it's not going to make that big a difference?
Cardona's pretty big. I mean, it's a top 5 coin, is it not?
It is, but is it big enough to have the same reaction from the rest of the market? Are people going to load into it right now? Because right now it's below. I like the range that it's in right now, and I'm considering allocating a little bit more, throwing another $100 in, and go ahead and staking it too, because I like this price.
Yeah, I think I don't know if it'll have the same size of impact, but it will definitely have an upside impact. I don't think it'll go as a splash in the pond, right? I think it's going to be a wave. It's going to be a push.
Do you think it's going to affect the entire market? Are they big enough? Are they strong enough to impact the entire market like ETH can?
Absolutely, just not to scale.
Okay. So right now we're on week 12. I have $200 on the sidelines right now, and I'm sitting at I'm looking pretty close to 1,900 right now. I did hit a short last week. We talked about that on the show. I had a short. I got stopped out. I flipped, went long, and it hit. I got out, flipped it around, hit short, and rode it back down again, and did pretty well with that. So at this point, like I said, I did sell out of the ETH at 1738. That was kind of my take profit zone there. Got out of it. I made 12%. I made $12 off of 100, and now I've reloaded today. A couple hours ago, I jumped back in, and I'm ready to ride that back up again. I got more money in there than what I did. So I'm pretty happy. I've still got AVAX. I've got 9 AVAX. I've got 108 Matic, my 208 on ADA, and then my favorite, Gary, from the Gary Burger bet between Craig and I. I've got some of that sitting on the sideline, but again, that was a joke, not so much as a serious long-term investment. But now I'm just kind of riding it. So that's looking pretty good. I've got, like I said, I've got 200 on the sideline, and I'm really considering going in on Cardona and going ahead and taking it. It's below my original purchase price at 48. Right now it's a little under 46. So kind of dollar cost average into that, and I believe in Matic, so I'm okay with it sitting there. But that's where I'm at. But again, our rule, we're scaling in, scaling out. And for us with this challenge now, that's kind of what the premise is based off, in a sense, that we have $100 a week that is coming into our account. That is something that even our listeners could do, is allocate that type of asset, $100. It's doable for a lot of people. It's not like some of the other casters out there are like, hey, if you start with 5,000 or 10,000, or what would you do with all this money? Well, most people don't have that much money. $100, people can squirrel that away. And how would we invest $100 this week is kind of what we're looking at. So, like I said, for me, I'm looking at Cardona. I do like Matic right now, and Link is okay. But that's really where I'm at. What about you? Are you looking at putting anything else into this?
I'm looking at the big dogs. That's all I'm looking at right now. Like I said, I'm waiting for the RSI to get where I want it on multiple candlesticks. I'm watching the Bollinger Bands. I'm watching the EMAs. And so when I find the time that I'm ready to strike, I'll either cash out the bot and then start scaling in there, or I'll leave the bot where it is and I'll just start pushing the rest of the money in.
Okay. As far as the scaling, we're looking at it from this standpoint of it only being $100. But once we've built that that bankroll up, so to speak. Where I'm at with my margin account is a little over $1,000. I'm at $1,093, and that's sitting on the sideline. I would like to leverage it and roll it up and have $5,000-$6,000 to sling into it, and take a big swing at some point and have a good long and just kind of ride it the rest of the way up. But when I do that and I take that out, that's where the scale in comes in, whatever the asset is that I'm buying into, so I don't get clipped right out of the gate if I miss on my TA. I can take that $6,000 and I can allocate the first 30% into it, and if it goes down a little bit, I can hit it again, and hopefully I'll catch it the rest of the way back up. And by the same token, if I do catch it flush and it's riding up, yeah, I'm not going to make quite as much on it, but it's that risk to reward and that risk tolerance that we've talked about before. Craig, as you go into load into this, you're watching Bitcoin, for example, at that 18.4. You've got your 500 or 600. Are you looking at leveraging, or are you going to go straight spot?
Just going straight spot.
Okay. And I talked a little bit about that last week on how if you're not 100% on that TA, and this is hypothetical right this second, so I can see why he's also saying spot right now, but it's something that you believe in, it's okay. You don't have to leverage it, because then you're not at risk and you're not under that time crunch. But having that money that goes into it right then on that spot, you don't lose it until you sell it. And I think that's a big benefit. But that spot where you're adding into it just a little bit at a time, are you going to push it all in, or are you going to ease in 20%, 30% at a time?
It depends on how big of a dip we're looking at, right? I'm going to have to just make a judgment call in the moment. If we see Bitcoin drop back into the 17s overnight, I'm pushing.
You're going to push it all?
I probably wouldn't push it all, but I'm pushing 60, 70% of the total funds in. But
because you're also happy with that purchase price too.
Yeah, and I'm leaving a little bit of a room for error in case I'm wrong and it goes into the 16s. Okay, I still got the other 40% I can average out. But if we're seeing it creep its way down slowly but surely to 18.4, maybe half of it into that point, 40, 50%. And leave room for error, and then I can buy in on the way back up to when it starts moving up. As long as it doesn't blast off, we'll be okay.
Are you looking at ETH at all after this merge? Are you looking and thinking that may be a good, now that everything is kind of has shook out in that sense? Are you looking at that?
Yeah, I'm looking at all the big dogs. I'm not scared of ETH. I'm not scared of Ripple, Cardano. Like, if you're top 12, top 15, you're on the radar.
That's basically what I talked about last week myself. I'm top 25. I feel good with the top 25 of pushing into any one of those that gets down to the lower end of the range that I'm looking at. So,
well, let's talk about scaling in. We talked about the plan, talked about allocations, hypotheticals, Chronos IDs.
jeez.
But we haven't talked about the rule. Now, when we're talking about scaling in, scaling out, let's define what we mean, scale in, scale out. What does that mean to you?
To me, that means that you're not pushing all in at one time. You're not putting all your eggs in one basket, and it's to work that risk and reward. Sometimes I'm willing to accept more risk and push more in at one time, but it also works on the backside of it, because it's not just catching it flush. We talk about the bottom. Craig hates that I try to quote unquote time the bottom, and that's not really what I guess I am in a sense, but I just feel like we've got plenty of time to go down. But it also works on the same way on the way up, in that if you miss the top, you've got to be able to get out. You pick your point based on your TA, and you start exiting your positions. That way, if you catch it, you're still getting profit, and you may not maximize the profit by hitting the very top. But if you miss and it continues to go up, you still have more profit that you're taking out. By the same token, if you just happen to nail it and you get it perfectly, yes, you've got some of the you were perfect with a profit, but on the way down, go ahead and get the rest of it out. But you're trying to work that balancing act. What do you think?
Yeah, so when we're talking about scaling in, we're talking about risk management. We're talking about, like you said, not going all in, because if you're wrong, then you have no way to average your costs lower, but then to take more money out of your bank and put more in, which I guess technically would be scaling in, but more than you intended. Right now, you're gambling with more money. You're risking more money that you didn't intend on playing with. So with that, when we're talking scaling in, it's all risk management, especially when we're talking about margin trading. If you were to take $1,000 and say, this is what I'm going to margin trade with, and you leverage it out to the max and things go sideways, you have no money to pull back in to save your debt to asset ratio, and you risk getting liquidated faster. If you were to put half of that in and then the market goes down unexpectedly, and then you put the other half in, you have more time to wait. Just like, early on in the challenge, I talked about that specifically with Burger, when I had shorted Burger after its run up, and I got in too soon, but I didn't put all of it in too soon. And so after the next pump, I got to average my price up more. Yeah, because I shorted it. I got to average the price up, and then it went up again, and I got to average again, so that when it did come back down, I wasn't waiting for it to come all the way down to my original price point to break even. The original price point is now profit. But when we're talking about scaling out, we are talking about taking that profit, and we're emphasizing not trying to time the top. Nobody really knows where the top is, and you want to make sure that you don't miss out on at least making some money. There's always going to be a scenario in which you sell some of your assets back into stable coins or into fiat, and it just continues to rush up, and you're thinking, man, I could have had more. But the flip side is, if you don't do that and it retraces, you're thinking, man, I could have had more if you would have just scaled out. So you're just hedging against the human error of trying to know when the top is at. And so we're hedging against ourselves making a mistake at the bottom. We're hedging against ourselves making a mistake at the top. And it still allows us to participate in gains both ways, just maybe not the most optimal gains. And that's why it's important.
Yeah, and with the TA, you're only so good with the TA. Nobody's perfect with it, and everybody misses with it. It only gives you what you hope to be as a better indicator on what the market is going to do based off of previous patterns and previous movement. It's not guaranteed. So sometimes you miss, and everybody misses eventually. Mm-hmm. And that's what Craig is banking on with me doing the margin and him doing the bots. So anyways, I'm pretty good, Craig. You feel pretty good about the show today?
Yeah, I feel pretty good. I need to go do some homework on this Kronos ID and report back next week.
I'm excited about it. I can't believe you did that on the show while we're sitting here.
Hey, if anybody else out there figures it out and just wants to, send me a crow just to show that it's working, it is Craig, CRAIG with a capital C, the number 2, .crow.
Send it. Let's see what happens with it. I'm Al.
And I'm Craig.
Thanks for listening.